Hey everybody, Tradius Trades back here with another COT setup markets video. There's lots of COT setups setting up right now and that are in process. This one that I'm going to share with you on YouTube today is the soybeans market. Before we get started, just want to remind you this is not investment advice. This is for education and information only. This is a very risky business. You need to be aware that you can lose lots of money in trading. So, and also credit where credit is due. Larry Williams, the man that created these concepts, I'd like to give a shout out to him because without his teachings and without his concepts, I wouldn't be able to profit in these markets. And I like to give credit where credit is due. So let's check it out. Why am I thinking that soybeans is set up for a bearish trend change? And to be clear, this doesn't mean we rush out and short soybeans just because it's set up. I'm going to show you a setup, then we're going to start looking for confirmation, and then take an entry on a confirmed daily trend change. But the conditions underlying the market, conditions that move markets from point A to point B, they are set up for shorts. They're bearish conditions. So let's see why. So the COT index is the top pane. So the red line is the commercials. So the COT index shows us that the commercials relative to the last 26 weeks are extremely short. I also like that they're juxtaposed with the positioning of the large speculators and the small specs. The large specs and the small specs are very, very long. Okay, so that's bullish code number one. Or I should say bearish code, rather, bearish code number one. And then our next code is this very bullish, extreme, exuberant reading from the advisor sentiment. So the advisors are telling their clients, go out and buy soybeans. And whenever these guys get too exuberant at extremes, especially when it's at a juxtaposition to the commercials positioning, that's a very nice setup condition. What I also really like about this trade, and I'll show you a bit more in detail later, is we're in alignment with a dominant downtrend, right? So we got this is a weekly chart, weekly 50 MA is the red line. You know, it's a downward trending market. So short signals should be more potent. Doesn't mean long signals won't work, but I put more faith in a short signal. And what do we see? The last time sentiment got this exuberant in this big downtrend, well, that was a great time to start looking to sell soybeans for a multi-week down move. Then we go back here another time. Really great time to sell soybeans for a multi-week down move. Let's look back in time again. So sentiment readings when they're in alignment with the trend are much more powerful. So we've got the sentiment in alignment with the trend. That's a very nice setup condition. We don't have very much from a valuation perspective. So that's kind of middle of nowhere here as far as valuation relative to gold. But the net positioning down here, we see a bubble up happening. So the net positioning line of the commercials is in red, and then the blue is the large specs and green is the small specs. We're seeing it bubble up, bubble out. You'll see it kind of creates these little bubbles at major market turning points. So we're starting to see that. What I also like is I drew this line here. This represents a year's worth of positioning, this horizontal line. What we see is the commercials are the max short they've been in over a year. In fact, the last time they got this short was back in December of 2023. So what's so important about that is, well, first of all, we're at a multi-year extreme in positioning. So those often don't last and they lead to major turning points in the market. What I also notice I really like is that the commercials are as short as they were back here, but we're at way lower prices. So that just tells me that the commercials just, you know, for them to be this short and at lower prices just speaks to me as to how weak this market likely is, and the fundamentals are fairly bearish. Let's go and take a look under the hood of this market and see if open interest tells us anything. We see price has been increasing generally for a few weeks on decreasing open interest. So there's not a lot of interest in this market, although the last few weeks we have seen open interest increase, and it has been driven by the large specs and the small specs, which is a bearish setup condition. If we go over here, we'll take a look at the seasonal, which is overlaid on price here. We see we're coming up. June 9th is a major seasonal high point, so a major seasonal turning point to the downside. So I'm paying attention. You know, we're in the middle of May now, so June 9th will come and go real quick. That's a major turning point for soybeans seasonally. Typically, we see last year we had a very strong down move from the end of May into August and generally into October. So will that play out this year? I don't know, but it is a bearish code that does point in the same direction as these other setup conditions. What else I notice is that we see price has been increasing generally for the last few weeks. What has the ADX been doing? The ADX here tells us the average. This is the pinch punch indicator, but this is just an ADX indicator. And it basically tells us when the ADX is going down while price is increasing, that means this uptrend lacks integrity. So that's another bearish code in our favor. So the last few things I'm going to show you is the spread. and the market premium. So what's interesting is the front month, so this is the front month right here, is selling for more than the next month out. So that's not bearish. That's a bullish setup condition. However, if we go over here and take a look at the spread relationship between the front month and the next month out, we see that premium is weakening. So what I mean is up here we got the front month. Down here we have this line is the difference between the front month and the next month out. So what we see is that this is going down while price is going up. So what that means is that this spread, this premium is falling apart, and that's bearish. So even though there is a premium in the market between the July contract and the next month out, it's weakening, and that's what I like to see. So that's all the setup conditions, you guys. It's a very nicely set up market for shorts. And you know what? Actually, I'll bring this chart back on the screen and show you one other thing, that why I like this short a bit more. And let's just take a look at this chart from a yearly perspective first, okay? What is the yearly momentum right now? Well, we're in a yearly downswing, right? So that's bearish. The high time frame yearly momentum is to the downside. Go on to the monthly chart. We are obviously in an 18-period monthly moving average downtrend. Now, want to take a look. So we've been putting in some higher highs and higher lows. So that is bullish. That's a bullish development. But what I'm interested in is the percent R, and then on the monthly. So if we're in a yearly downtrend, we're in a monthly downtrend. These overbought monthly percent R readings are going to be very important to me, especially since we have a setup to sell. So what I notice is here in April's candle, we did close the four month percent R, the green line, did close up pretty overbought. And then what I'm really curious to see is at the close of the May candle, can we get maybe the 4 period and the 10 period, which is the orange line, closing really overbought? That to me will give me a nice, that will be further confirmation for me that we do have a nice sell setup coming, because we got overbought readings in alignment with a very dominant, strong underlying downtrend. So that's why, you know, I like to pay attention to the monthly charts. Those give me a bit of a clue as to which trades are perhaps going to have a whole lot of potential for a very major move. So then let's just go over here, check out and see if there's any confirmation. So on the daily chart here, and we do have some confirmation. We see price making higher highs while the ProGo is making lower highs. And we also see the professional line, the red line, is now closed below the public line. So what that means is that the public, or the professionals, are not driving the buying. In fact, it's the public that are trying to buy the bottom. So that's a good sign. I'd drawn these trend lines here on these oscillators because I'd want to keep an eye on them. If we do get a close beyond them, that's a pretty decent trend change indicator. I've got that drawn here on balance volume as well. So that's the setup, you guys. If you have questions about COT setups, how to trade with COT and fundamentals, just shoot me an email, tradiustrades@gmail.com. I have a Discord, which is absolutely free, where I share my thoughts on the markets, share the trades that I'm taking to, you know, hopefully add some value and hopefully something you can take away from it to add to your own trading. And a great crew of people in there that are all getting to know each other. So it's a good community. If that sounds like something you'd be into, just send me an email. And I hope you guys have a great weekend. It's a long weekend up here in Canada, so I'll be enjoying some time with my family. And I'll see you guys next week. All right. Thanks for listening.